Welcome everyone, this is Thomas from TradeWin, and today in this video we'll review part of the alpha review I made from a Phantom-like Judas Swing model. So for those of you that already know me, you know that I'm the founder of TradeWin, and TradeWin is a company which objective is to debunk the lies you keep being told, we keep being told on YouTube. My objective is to make large-scale backtest studies in order to give to retail traders the possibility of accessing professional level data to make informed decisions. That's what I do at TradeWin. In this video, as I said, we will review those results, but only on Euro and GBP. That's part of the free content I make. As some of you may know, I also have some exclusive content in which I review more in depth with much more data, much more symbols being studied in different time frames, the analysis of thousands of 20-year backtests. This is unique, and this is what I do at TradeWin. For those of you guys that want further, I'll make a quick introduction saying that everything is available at Whop. It's the platform allowing me to share my content easily. So here we go, guys. This is the strategy I'm selling for this time, and I'm really proud because that's the first strategy, the first among many hundreds I hope doing this year of my strategy reviews. So don't hesitate to join. This is the cheapest thing I can do for you, less than $20 in order to get pro data level backtests. So you would access the global review that contains many videos in order to explain how I worked and what are the results. You will access all the data I have generated, so you could verify it by yourself. I also link you to our private Discord. I love watching amazing people sharing their thoughts about what they have studied. So please process. I updated the payment details so you could pay either by card or by PayPal. I made FAQ question 1 specified for crypto payments, but this is really not the priority for me to deal with those payments. Going through this, you will get everything automatically. Without additional introduction, let's go with Phantom Judas Swing. So this is a required watch. You need absolutely to watch the Phantom ICT Forex Judas model videos before watching this, okay? So for those of you that already done that, here is the setup. We mark the high and the low of the previous sessions. Then we wait for the liquidity sweep of either those previous session levels. We wait for a break of structure or a market structure shift. And then we enter the trade once the market structure shift is completed, okay? So that's the Phantom Judas Swing model. I call Phantom. Phantom has also a rule saying that if the stop loss is further than 20 pips, we don't take the trade. And he takes 2R profits, a profit target each time, okay? And of course, here is the session definition. So Asia session from 20 to 3, London from 3 to 8, and New York from 8 to 17. And each time that's New York time. Okay? Let's dive into the next elements. The principal difference between Phantom variations and other kind of variations from the Judas Swing stands into the way he defines a market structure shift after we swept the liquidity level. So here is some explanation about Phantom videos, what I have done in order to show you that the tests I have conducted make sense.
that EU swept out the high while GU did not. So in this scenario, we'll be looking for EU shorts, and we can already see the break of structure level right here. We have our London session low right here and right here for GU. So in this scenario, which ticker do we play? I mean, it's very obvious, like if you look more in depth into candles, if you look at these red candles right here, right, or the black candles in this scenario, we can see that every time they come down, they kind of wake back up, indicating strength. While these red candles, they're just kind of like coming down very hard. And we can just see overall, GU just comes down much more hard than EU. So EU is obviously a stronger pair in this scenario. So we will target EU longs. So where is our break of structure level? So right here, we can see that this is the 5-minute high that we're looking for our 5-minute break of structure.
Okay guys, so now let's look at the same example, which is July 10th, 2023. Let's dive into it. So here I have exactly the euro in the 5-minute time frame exactly on July 10th. So just as Phantom did, we define here the different high of the session, so between 20 and 3. The high is here and the low is here. As Phantom says, we sweep the high and we are waiting for a market structure shift. You see the line here, this is the high of the Asian session, okay? And now we are waiting for a market structure shift. If you recall, Phantom defines exactly this low here as the level to breach in order to consider the break of structure effective, okay? So here I will just display in the graph the 3-bar fractal swing high and lows, okay? And we can see that there specifically Phantom used a fractal low, a fractal 3-bar low, as you can see this point here, for his market structure shift, okay? That's really important because now if we go to the New York session, so I move a little bit to the New York session. By the way, what you see here is a little app that just displays the equity curves of any symbols based on the data I had from Backtest market, which is my data provider, okay? And I can add to displays, and I can add some elements here if I click in my options. So let's do now the New York session, okay? So I take London from 3 to 8. From 3 to 8, 3 is there, 8 o'clock is there. We can see that the low of London here, okay, is being swept there, fine. Now we are looking for a break of structure, fine. So let's display the 3-bar fractal. Oh, interesting. Here, and Phantom again does it, he says that the obvious level is this one, okay? Look again his vid in the previous slide. He says that the break of structure here is this one, okay? And it corresponds again to a fractal high, a fractal 3-bar, as you can see here, high. So that's interesting here because without saying it, Phantom kind of uses here the same 3-bar fractal high and lows. Fine?
And for EU, we can see that we sweep out is obviously stronger one in this scenario. So we'll look for EU longs. We have our break of structure right here. And we confirm right here. So stop low, target 2 RTP, and we get stopped out right here. So that's -1R. And now we move on to the New York session. So in the New York session right here, we can see that we have the lows right here and right here. And the highs don't get swept for London session, so we'll only be looking for longs in this scenario. And we can see that GU actually sweeps it first, because on EU we sweep out later. So our focus in this scenario is actually GU. And right here, we can see that we have our break of structure level right here. So this is our break of structure.
So again, let's do this for the 21st of July 2023. You have on the left here the Asian session until 3, and we can see that the low of the session is swept there. Therefore, we are looking for a market structure shift to the upside. Phantom uses this point. You can find it again previously. This point as break of structure. Let's again display the 3-bar fractal lows and highs. Oh, what a surprise! Here, Phantom again uses the 3-bar fractal as the swing high for market structure shift. And we can see that we reach it just later as shown in his video. Okay? So the message is clear. Again, the 3-bar fractal is used. So now I'm displaying GU, because he trades GU after that. So I'm switching my display. It's coming. Okay. So here again we go with GU for the New York session of July 21. So from 3 to 8, okay, the low is here and immediately swept. Phantom, I'm going to zoom this a little bit so you can see better. Okay, fine. Phantom uses this high over there, okay, this high of this candle to be the level of break of structure. Fine. I will display again the 3-bar fractals. Oh, we can see that after we swept the low here, the 3-bar fractal has been updated. First it was this one, then a few candles later it became this one, and then it became this one. And you know what? That's exactly the logic I implemented each time. Until we make a break of structure, we will adapt and update the 3-bar fractal, okay? So the 3-bar fractal is here in this case, and it would be breached at this candle, okay, at this close. So we'll enter this long at the close price of this candle, setting the stop loss here and targeting 2R, okay? So this is a really important message. Whenever Phantom says we break of structure, my take, and it's only my take, is that he means the 3-bar fractal high. Good news is that there are plenty of indicators that can help you identify this specific level. From what we saw in the previous slides, we understand that even if Phantom doesn't call his entry model a mechanical way, saying that it's obvious, we can see that, facts are from the previous videos that Phantom exactly uses the 3-bar fractal definition for his break of structure level. Okay, so what I've done via TradeWin is to test 2 entry models, either breaking the structure of 3-bar fractals or 5-bar fractals, to see if there is any kind of difference. To do that, you can find any kind of indicator in TradingView to follow those swing high and lows. I like using fractals from Nephew Sam. There are plenty of others that do exactly the same thing, okay? The main idea is to define a fractal high or low as the max or the minimum of 3 or 4 or 5 consecutive candles. Okay. Let's dive now into the TradeWin strategy variations. A really important thing to keep in mind is that my backtests consider already a spread, okay? I decided to choose 1 pip spread for each trade you execute, meaning either you enter, either you exit your trade, you will be asked by your broker, you will be imposed by your broker to lose each time 1 pip. Okay, that's what the spread is about. In my whole study, and this is exactly what makes TradeWin awesome, is that I parameterized the strategy in order to test different variations of it. As I said, you can see at the top that the entry condition has been tested either with 3-bar fractal or 5-bar fractals. Okay. Additionally, I wanted to test if the SL 20 pips, SL greater than 20 pips rule by Phantom, saying that you don't take a trade if when you set your stop loss it's further than 20 pips. Okay, for those who are not really familiar with this idea, here is the following. You witness a break of structure, okay? So you are at the step after the liquidity sweep, and you see that where you should have put your stop loss and where the market structure is broken, you have more than 20 pips of difference, then you don't take the trade, okay? So I evaluated if this idea had any incidents on the results or not. For the take profit condition, Phantom sets 2R. We can find many variations of that, 1R, 3R. And I also wanted to test the previous session opposite level, which means if we sweep during a London session the Asia low, setting the take profit target to the previous session opposite level would mean to target the Asia high level. Okay. And another example, if I'm trading during New York session and I have swept the London high, then I will target the London low. That's what it means. For the stop loss condition, I decided to add a possibility of updating the stop loss to break even when I make 1 hour of unrealized gain. That's just to see if protecting at some point profits helps the strategy result or not. And what's amazing is that I tested this for each London and New York session separately for the past 20 years. When I trade both sessions, here is a difference with Phantom. If the London trade closes after New York session begins, then I don't trade New York session at all. And I tested the 3 time frames, 1, 5, and 15 minutes. So with all of that, you have an amazing 1000 backtests being performed on 20 years. Nobody does that, please. Let's dive into the results soon. I will continue saying that each strategy variation has a crazy name, and you can find the different elements here. So this beautiful name, Edge London Only, SL 20 pips, TP2R, SL Breakeven, means that we only trade during London session. It can be replaced by New York. If I have nothing, means that I trade both sessions. The entry condition is the Phantom rule of 20 pips. If the stop loss is further than 20 pips of my entry, then I don't take the entry at all. The TP take profit, the different conditions we mentioned previously, and the stop loss break-even condition here. Okay, here is the crazy name of one strategy variation. We have more than 1000 of them for each symbol being backtest. Reminder that in this specific study, the free content I'm providing in this video, I'm only talking about Euro and GBP. That's all, because that's the Phantom pairs. I've also added the following trading days, no trading days, rule, saying that if we have FOMC events, CPI days, NFP Fridays, and either the Fed chair testifies or speaks, then the whole trading day will be considered as no trading day. Okay? These news are usually marked as high impact over the markets, and they exist mostly for USD. They are linked to the US dollar. So, for example, if we take euro, we can say that both euro and USD news could be identified as no trading days. For example, if we have a CPI high impact news on euro, then we will not trade euro USD during the whole day. If we have FOMC minutes with high impact news on USD, then we won't trade euro USD neither. Okay? Thanks for GBP. If we have a CPI impact news on GBP, we won't trade the associated pair, and exactly if Fed Chair Powell speaks for USD. Okay? The idea is exactly the same for USD JPY, and for the other symbols involved in my studies, which I won't present in my video, I have considered only USD news. Fine. Let's bring the results. Here is the stats you have been waiting for. So here, a really important thing to understand, I will explain the table in details, is that I started to trade in January 2007. Why is that? It's because, thanks to a buddy, I managed to retrieve the data from news until this moment. So as you understand, here the column corresponds to either I traded or not during the news presented in the previous slides. If trading during red news days is yes, means that I didn't care about the economic calendar and I took all the possible trades. If there is no, it means I filtered the trading days as explained previously. Okay? So here is the table. The strategy is the first column. Okay? I won't get into details. You could stop the video, watch this, make your own conclusions. This is kind of info you will never get anywhere else, so please consider studying this. What's amazing, the first conclusion is that we won't have here for Euro and GBP any profitable strategy variations for the past 15 years. Okay, that's the first thing. So anyone telling you that, yeah, I have backtested, I know it works. Sorry buddy, I have tested that on 15 years with and without news. I'm sorry, this doesn't work on the long term. Okay? We have win rates around 30%. Okay? And the few strategies where we get above that, it's because we have enhanced the win rate taking the SL break-even condition. A really important note here is that every of my SL break-even strategy variations considers a break-even trade as a win because you protected your capital, fine, and you didn't lose anything. From my perspective, that's a win. So if you don't like this definition, then we might go to 30%. Okay? So the way I see this percentage here is that 60%, nearly 60% of the case, maybe you won't take a loss. That's what it means. Okay? However, even if the win rate was high, we ended up unprofitable. Okay? Trading the news or not trading the news? That's the question. When I trade the news and I don't care about the economic calendar, we can see that I have more trades. Okay, here you can see that we have at least 20-30% more trades if you trade the economic calendar because you don't give any importance to it. And that's exactly the same for any other thing. If I take here another example, those two strategies here, okay, we have again 20-30% total trade count, which is different. Another thing which is interesting is that in the best performing strategies, even if they are not profitable, we mainly have here GBP only. We only have one row with euro on the 5-minute time frame. Okay, perfect. The max losing streak corresponds to the maximum consecutive losses you will get trading the strategy. Okay, for me that's a really important thing to witness in the 15 previous years. Okay, you won't trade the same if you have one max losing streak or 27, for example, here. Okay, you need to be prepared for that. Another thing is that even if I included spreads and I try to offset spread in my simulations, setting the target profit a bit higher in order to offset the spread, we see that I rarely do reach exactly the average gain per trade as expected target profits. Here, in the best world, if I have TP2R, I would expect something to be very close to TP2R here in the average gain whenever I have a win. However, we are slightly below it, and that's the case everywhere because of spreads and because another rule, which is that I close every trade by 17, okay, New York time, at whatever price if I haven't touched SL or TP. Perfect. So that's the first thing you need to have a look at, is that trading or not the news doesn't change the overall gain-loss ratio, the overall performance of the strategy. We do less trades when we don't trade the news, okay, but we don't make more money. That's really interesting here. Once we saw that for the 15 years, I would say again, these are phantom-like Judas Swing strategies, because as I say, from my analysis, Phantom likes using a 3-bar fractal for his entries. I can't say it's always the case, but for the few things I have studied, I can tell with enough confidence that it's pretty close to what anyone on earth would call a market structure shift. So sorry, we don't have any profitable strategy variations here. So as we don't care about trading the news or not, I decided to go back to 2002 to get the 20-year backtest. You will never see that on the internet because this requires skills nobody is willing to share on the internet. And I believe that people that know how to do this do that for banks, investment funds, etc. privately without sharing it to the world. My business, my TradeWin company aims at providing retail traders this kind of insights. Okay. So, doing the top 10 ranking for London session, we get a bit better, but still we are in drawdown. We are not profitable after 20 years. Okay. We can witness that GBP still holds most of the top 10 seats here, okay, with nearly, I will say, one trade per day on most of them, okay, one trade opportunity per day. Here are the max losing streak, the average gain. Again, be aware that the average gain is not always the take profit because of spreads and because when I close a trade for a win, it's not always reaching TP. Could be just because it's the end of the day and I close the trade for whatever price. What is interesting is that if we reach a lower TP, we get a higher win rate, okay? But it's still not enough to get a profitable result. So we can reach around 50% of win rate from the 30 usual percent from Phantom reaching 2 RTP, but this doesn't give us a profitable strat, okay? Also, very interesting thing here is that the SL 20 pips rule of Phantom doesn't seem to be relevant, as only one strategy variation over the top 10 during London only sessions trades appears here in the top 10 ranking. Okay, we can do the same for New York, and we can witness again that fixing the take profit to 1 hour gives, I will say, an improved win rate, even if the overall win rate keeps being higher during New York session than the London session, more around 35-40%, where we were more 30-33% for London session. But again, we are less profitable here. We don't have any profitable variation over 20 years. And finally, if we are trading both sessions, the best strategy we could find, I will say the less worst strategy, would to be only London only, 3 fractals and taking 3-hour profits. We are close to profitability, but we are not at all. That's the main messages I'm willing to share with you in this video. So if we have a look at the cumulative performance curve, because this is, guys, what you like, the best strategy I could backtest is this one. So for those of you guys who started backtesting in 2023 and 2022, maybe the Judas swing could be a bit profitable. Okay, that's fine. But you can clearly identify that there have been horrible years of performance and some good ones. We can see here a good year, 2007, nice year, 2011, 2015, 16, 17 maybe, but the gains are not enough to make the strategy profitable. Okay, again, this is from 2002. This is mind-blowing. Nobody will give you such a graph. Yes, but this is not how Phantom works. Phantom chooses one of the best pairs between EU and GU, and it might change the overall results. Okay, you might be right. I didn't backtest these strong pair choice for each trade. However, what I can give you is that on the left, the same strategy for GU, and on the right, the one for EU. And I'm convinced, here is the data, that even if you choose the best of each curve, the best trade each time, you won't get profitable for the long term. It's interesting to note that one pair seems to be better than the other one. I prefer here on the overall equity curve GBP, okay, with some resistance here we don't have in euro, and here a quite profitable period here we don't have in EU. So guys, here is my take. If you like trading the Phantom Judas Swing and you have backtested it, you might be right, because could yield some profits over the past years, but it won't be incredible profits. We might be here around 30, 40, maybe 50 R, okay? R is again the risk you take per trade. You can fix it at whatever percentage you want. If I have something in mind from this video, is that I would much more prefer to trade the Phantom Judas Swing model, or the Judas Swing model with the rules I presented in that video, on GBP rather than Euro, because of this curve and because of the table results I presented previously. The conclusion from this study is that we might have good years. Most of the years through the backtest were bad years. Trading during red news days has no significant impact on strategy results, and trading one session isn't more profitable than trading both. In fact, in this case, we don't have enough profitable variations at all. Not taking a trade because distance to stop loss greater than 20 pips isn't a relevant rule at all. Okay, so these are the conclusion from the study, and everyone who wants in his life thoughts about trading Phantom Judas Swing, please watch this video, tell them about that, because they will save capital and they will save their money. So you had we'll say a view on a little part of my study. I did that for 3 time frames, for 8 symbols, that's the famous 1000 backtest I performed, and I'm presenting that in my specific course for $20, and that's all, because I really believe that access to this kind of data should be democratized, and every retail traders should have the possibility for accessing this info for a cheap price. I will give, and I'm only at the beginning of my adventure, access to exclusive videos showing how I analyze those results. I will give access to each log file, trade log file, which means that you could verify that I effectively conducted the claimed backtest. And I'm pretty confident saying that I'm the only one on YouTube making such in-depth backtest and analysis. I open a Discord access in order to gather, I will say, amazing trade winners. I love seeing you sharing your thoughts, your analysis, your comments in Discord. And of course, each one of my customers has the power to choose what the next TradeWin study will be about, which strategy I will be studying. My job is to make the best backtest study on the internet. Of course, there is behind that the goal to find if they exist some profitable strategies over the long term, but each of my studies doesn't guarantee that I will find strategy variations, and that's a really important thing. I'm just a backtester, okay? That's all. And I don't even know if all weather strategies exist. In fact, when you talk with professional portfolio managers, they will tell you that they have different strategies for different market conditions and that they do not trade only one strategy. Please think about getting into the adventure. It's going to be really exciting for now. And I thank you for your time. Thank you for coming back. And I hope you enjoyed the content. Have a good day.